My girlfriend wants me to buy Mercedes. What should I do?
Buyers come to the lease company trying to buy or rent his car through financing and leasing. The seller who advertises the lease or finance will provide package, hoping to make a contract with the buyers. Once the agreement is done, the contract is legalized and buyer needs to pay installment monthly according to the criteria listed on the contract. At the graph on the right side, three parties, customer, car dealer, and leasing company, are involved in this workflow. By definition, what is car finance? It comprises different financial products which allow someone to acquire a car with any arrangement other than a single lump payment. The provision of car finance by a third-party supplier allows the acquirer to provide for and raise the funds to compensate the initial owner. There are two main players in the industry. First of all, captive finance companies such as Daimler Financial Services and Chrysler Credit. They are lending companies wholly owned by the automobile manufacturer. Second, the commercial banks. They control 36% of all auto finance loans outstanding as of 2014. Currently, Europe and the US are the two largest markets for auto finance and leasing. The rise in sales is key for success. Global car sales are rising and forecast to exceed 91 million by 2070, even up to 100 million by 2027. Going forward, traditional F&L services will develop separately into two parts. As auto financing and companies are constrained in vertical growth by their automotive parent company performance, captives are now looking to expand horizontally and adding more products to their portfolio. They are currently focusing on mobility services as an add-on to traditional services. As for banking, direct banking or general insurance will be added into traditional F&L services. And then the next phase would be full bank activities, including primary banking business, refinancing, and hedging.
I'll start with 2013. Our overall profits for Daimler were over 10 billion euro. And Daimler Financial Services were about 1.3. This year for 2014, our profit will exceed 2013, around about 1.4 billion euro. So very, very strong contribution to the overall company's profitability. What we like to say is that our primary purpose and mission is to help our automotive companies sell and lease more vehicles. So as they grow, we grow. And that's what we get up every morning focused on, is making sure we can sell our internal terms, our brand partner, we can help them sell more vehicles.
DFS offers a comprehensive range of automotive financial services and innovative mobility services. DFS has a strong global presence in 40 countries around the world. Customers and dealers continue to give very high marks to DFS. Just last year, in 2014, DFS was named one of the 25 best international employers worldwide by the independent Great Place to Work Institute. DFS offers competitive loans, flexible options for low monthly payments, reliable insurance coverage, convenience of vehicle switching, smooth and efficient fleet operations, as well as safe and attractive investment opportunities. Vehicle ownership is realized with attractive loans that give customers the freedom to choose the size of down payment and duration of contract. This allows for high level of financial flexibility and vehicle ownership. In many countries, DFS also offers balloon payment financing, which is characterized by particularly attractive monthly rates. In terms of mobility services, DFS provides a state-of-the-art smartphone-based services that already makes it one of the world's leading providers of car-sharing services. At the same time, DFS is establishing strategic partnerships with local governments, rental companies, and public transport companies. Overall, mobility services of DFS provides flexible, timely, and cost-effective solutions for customers.
One car fits all. But what makes Car2Go so unique? With Car2Go, you can enjoy mobile independence, even without having your own car. Because Car2Go are available everywhere with no fixed rentals. Only the exact usage period will be charged right to the minute. The Car2Go service team takes care of refueling. And parking is free throughout the whole Car2Go business district.
As a captive automotive finance company and for Daimler as a whole, we like the idea of leasing because over, say, a 12, 13-year period, you may have 4 different cars versus 1 or 2 different cars. You know, so, and then we can also resale or release that vehicle to someone else. So, and our customers that lease our vehicles tend to be more loyal because we're having constant feedback and communication with them about what their intentions are. And we can drive that ownership, loyalty, and retention through what we call a residual value product or agility.
At DFS, new business and contract volume worldwide continue to reach at record levels. Key revenue driver for DFS is the global sales of Daimler passenger cars and commercial vehicles. At the same time, DFS has successfully supported a large number of companies worldwide with the financing and management of their vehicles and fleets. DFS's costs are primarily associated with the operations and overhead to maintain its global financial infrastructure. Overall, the main factor behind the increased earnings at DFS was the very positive development of new business in combination with low costs. The main areas of DFS's activities are Western Europe and North America, and increasingly in Asia as well. Overall, growth was driven by all regions.
In Asian emerging markets, the commercial vehicle industry is growing at a tremendous pace, yet financing and leasing are still very low. There is tremendous potential in car financing. The market share of captives remains low but is continuously growing. In China, car sales expected to rise 8% to 21.3 million vehicles. This is lower than a 9.9% growth in 2014, but the growth potential is still bigger than in Western mature markets. 90% of cars in the private sector are bought using cash. Operational leasing growth is expected with a CAGR of 28% and a finance leasing with a CAGR of 27%. Asian emerging market regulations keep captives outside the banking business, as market entry is usually restricted to commercial banks such as India and China. The nature of the captive business is that they only focus on the brand that their parent company offers. In the case of Daimler, they only serve the vehicles under the Daimler brand. As of now, commercial banks still dominate the financing and leasing industry in these emerging markets. For example, in China, banks have a market share of almost 80%. Banks provide a wider range of services to its consumers. Consumers work with them for their day-to-day needs. Furthermore, banks have lower rates, better access to credit histories, and ability to process loan approvals more quickly. In India, the threat is so severe that players like Ford and GM have chosen to return to their partnerships with local banks. Due to the threat of substitutes, customer bargaining power is high. For example, India has more than 35 financial institutions that provide car financing. Outside of a customer's contractual obligation during the period of financing and leasing, it is relatively easy to switch from captives to banks, especially during the bargaining period. Captives raise money through the capital markets. Since they cannot do standard banking services in most of these countries, they lack an important revenue stream in customer deposits. Hence, they will never have the economies of scale that a commercial bank has. There are, however, still a number of options available, making the bargaining power of suppliers simply a medium threat. Competition in this sector is intense, as captives try to capture larger market shares from the entrenched local banks. Banks compete with each other through lower rates, better packages, and wider offerings. Captives, on the other hand, have to resort to innovative packages such as balloon financing, as they try to capture the market from banks with an economies of scale disadvantage.
Though the current market share of captive in auto financing is still small, it is expected to grow further thanks to two reasons. First is the increasing demand for vehicles such as cars for individual consumptions, vans and trucks for logistics purpose, and other services such as fleet management. Second, customers are becoming more receptive towards financing model, especially those from captives. For instance, in China, by 2020, the share of captive financing is expected to grow to 32%. Another opportunity for captive financing is the more relaxing regulations to get license and refinancing opportunities in Asian markets. Lastly, as financial market and economy of Asia become more sophisticated, valuation of leases, residual values become less risky. For Daimler Financial Services, the company has certain advantages in China and in India. The company has a very diversified product portfolio. It has first mover advantages in several offerings such as agility lease or operating lease. In emerging markets, infrastructure are very underdeveloped, which make financing options more costly. For example, regarding agility lease, the bad road conditions can reduce residual value of the vehicles, thus lower contract value of the lease. Due to intransparency in credit system, companies can forge documents and overstate their ability to pay for a lease. Asia is fragmented in culture and stage of development. As a result, customer behaviors and business ecosystem are very different across countries. Management implication is that for each market, Daimler Financial Service must modify their product offerings so as to first match the customer needs in that country, and second, to operate within the limitation of the business infrastructure. Therefore, the company would not achieve the economies of scale it would have if the products are launched without modification across markets.
Given the uniqueness of the Asia market, what must DFS do to continue success in Asia? Joint ventures has always been a good starting point to enter a new market. Yet, due to local banks' dominance in car financing and the lack of a sound credit system, car financing can be challenging to DFS. Instead of going up against local banks, DFS can try to provide premium services to its customers, such as more customization on car loan offerings, and more post-loan services. To be able to achieve this, DFS must rely on customer data and strong sales support. Secondly, for markets like Singapore, where availability of parking space is an issue, corporate car sharing is a model that's worth trying. The idea is to work with corporate clients in a building where they have parking spaces below and can rent a few spaces for vehicles, and that their employees can take their cars for off-site meetings. Thirdly, for markets like India, where infrastructure is underdeveloped, DFS can work with local telecom providers to launch an app or a platform which allows its car owners to stay updated to current offerings. Last but not least, DFS can work with local government and use them as market facilitator and financier to launch their innovative car services. Recently, DFS has signed a contract with the local government of Chongqing, China to launch Car2Go in the year 2015, making Chongqing the very first city in Asia to launch these new car services, which has been a major success in the States and Europe. What DFS can offer to the local government is the mitigation of air pollution and traffic jam. Active involvement of the local government can help DFS in securing more parking spaces and even subsidy.
Thanks, DFS. Now I have a girlfriend and a car.